All right, folks, 9:10. Live stream the closing hour, pre-CPI. If you can hear me fine, you can see the picture fine. We're looking at the VIX 10 minutes chart. Just a little feedback and we begin. And by the way, if you're watching on Patreon, on Discord, and for some reason you're not able to post your comments on YouTube, post them in the Discord channel or under the link on Patreon where you're watching the video. I'm going to address all of these comments before we're finished. But let's see here if the feedback is good. Okay, everybody can hear. Good. Let's begin here with indicators really quickly because not going to be important for today. But the dollar, no move here today, no change from yesterday's reaction, still moving higher. And the implications here about the CPI, if the dollar is going to move higher, that perhaps it's going with the 25, not the 50 scenario. Now, what do we do with that? We have to look at the bond yields. This one is actually getting absolutely clobbered today. Probably going to break the trend line if you look at the weekly chart here. And what is the message from bond yields? It's going with the 50, not the 25. So we'll see how that's going to be sorted out tomorrow. And the implications, of course, on Japanese yen and all of that. But for now, the most important indicator for today is the VIX. And if we look at the 10 minutes chart here, I was looking at this right before the stream. We yo-yoed back and forth, of course, in the beginning of the day. The scare that we got from JP Morgan and the banks and consumer lending, that has to be taken seriously. That's a huge economic indicator. And it's the same thing that we've seen, by the way, back in 07, 08, right before the economic crisis. So we're beginning to see now the risk of systemic risk showing up. But the VIX below 20, but not at a comfort yet where we can say for sure that we're done. If the VIX wanted to go down, folks, it had ample opportunity to go down. I think it needs a solid piece of evidence that the risk is eliminated. And right now, we don't have that. So we have to keep that in mind. That, yes, we have an upside day again today. We'll see how we close, of course. Still, the hour is still young. But since the VIX is not, let's say, 1760, below 18, I would have said, okay, there's a different message. But we've seen these kind of retractions in the VIX before, only to move higher again. So we're not going to take any source of comfort here by this action. Now, when we look at the indices, the SPY right off the gate, daily chart, any change here, upside day again, but did it change anything here in our strategy short of the 50? So unfortunately for us, we have to wait till the CPI to figure out whether it's going to be a full reversal of the bearish engulfing candle or failure, and down we go again. Which merits, by the way, some hedging that you need to do, especially if you're net short, if you have put options more than calls. And you do that by either buying some Q calls or SQ puts, or even the SVIX, which is the inverse for the VIX, so the SVIX. So basically, if there's something good tomorrow and we see the market, the SPY trading above the 50 right here, which would be considered as a bullish reversal, confirmation of that. If that's the case, it's going to happen because the VIX went down. So in this case, when you go at the SVIX here, the inverse of the VIX, so you're basically betting that the SVIX will go higher and the actual VIX volatility index will go down. So in this case, we want to buy something, let's say the 28, 29. So let's see the pricing here. You'd probably go with the 27 for the week. I think that's going to be sufficient enough as a hedge. And if you see the SPY, if you go back there, here's your SPY. If we indeed tomorrow we close above the 50 days moving average, then okay, the message is clear. The market wants to do something different. It wants to move higher in anticipation of the 50 basis points cuts, and that's going to eliminate the downside risk, at least in the short run. So we have to adapt and change our positioning based on that. But again, worst thing you can do is abandon your short positions and freak out. Maybe you abandon these positions. Next thing you know, tomorrow we flush down because of the CPI has whatever, fill in the blank, that caused the dollar to do this, that caused bond yields to do that. Again, if we had confirmation today, I would have said good. But usually they don't do that until we have the main event out of the way. So again, SVIX will be sufficient enough in my opinion. If you don't like that, you can go with the SQs, the puts in this case. If you're net short, of course, you go with the 9. That's going to be sufficient enough to give you some exposure to the upside. If you happen to be net long, let's say that you bought here a little bit You need some hedging. You need to buy something that hedges against downside tomorrow. And let's say SVIX, in this case, you want to buy the puts, not the calls, so you're probably going to go. But here, see, the puts for this guy are kind of expensive. The spreads are kind of wide, so you probably, if, in the case of the puts, let's say if you net calls, not net shorts, you probably go TZA. That'll be sufficient to TZA puts 16. That's going to be sufficient enough. Or the SQ calls, that's going to protect you. Excuse me, the TZA calls, we'll revisit that later. But if you net long, you're probably going to have a hedge like this with the 9.5 for the SQs. If you go back to the TZA, you probably want to do the calls, not the puts, because the TZA is the inverse for the IWM. So you probably want a protection here at the 16.5, 17 a little too far, but 16.5 I think will be sufficient. So you pick your pick here. Requires some degree of hedging today, just to be on the safe side. Now, let's move on to the intraday action here, 5 minutes chart. We don't need any of this. We're above 547. To me, again, that solidifies, if we look at it from this perspective, another higher low. We're still kind of morphing here into a higher high territory. We're not above the 550. Whether you look at the 50 days moving average or the intraday, the 550, where we for sure have a bullish reversal. We're not there yet. So, unfortunately, right now, it's just this kind of a rebound decays a lot of the put options that some of us have, but it doesn't give us conclusive evidence whether we should abandon them and switch or not. So for now, we're just going to do a small hedge today before the close, and that's about it. Nothing really changed meaningfully in the hourly or even the daily chart. Zoom in a little more to the 5 minutes chart, and if the VIX begins to catch a bit here, as we see the CPI hedging showing up, we might revisit 547. If we lose 547 at the end of the day, I mean, that for me, that's going to be a net negative because it'd be a failure to form the higher high that we were anticipating. So keep that in mind as we speak. Now, when we look at the Qs, any confirmation here for a reversal, let's say the daily chart, let's do the 100 here. Nothing really, not above the 100. 50 is way too far, 20 is way too far, so we have to look at the top of the breakdown candle, 461.22. You got to remember here, this example, we closed above at least the open of the engulfing candle, the breakdown candle. That was a bullish reversal confirmation. We don't have it yet. It's just a rebound within the body. Annoying for folks who are holding puts, but besides that, it doesn't do anything to change the narrative or to change positioning in a big way. But we are above, if you look at the hourly chart here, we are above 453.81. And we're not above 461.22, my second confirmation line. So does it merit some hedging if you net short? Yes, because all you know that if there's a move tomorrow, it's going to happen pre-market and you need a hedge against that. So that's all what we're hedging against right now. If you're net short. Net long, if you probably bought right here, dips right here, you got to have a plan if we flush down in the morning. You got to have something to protect you here, just so you don't lose the gains that you got from buying the dip here. So that's the cues for you. When we move into the 5 minutes, let's see how we close here. The important number, as we said, 453, comfortably above for now. So I actually want to look at the NASDAQ futures. And in this case, where the number would be, let's clean this up a little bit more. And it's probably going to be, so we got our confirmation here, the hedge using calls. This is from the morning brief, by the way. Just want to move things out of the way a little bit so I can see better here. And we got the 644 being typed twice, so we don't need this. Goodbye. There we go. And we're above the line where we got the confirmation is short last Friday. If we close above, again, it solidifies already. We have confirmation the hedge using calls here if you're short. So we'll do that. Do it right now. If you're listening to the stream, do it right now. If you're net short, do the SVIX, TZA, SQs, whatever instrument you use to do a little bit of upside hedging. Now, the IWM doesn't look as good as the rest here. The IWM looks as a bad leading indicator, but we don't have a break under the 100 days moving average yet. So I would still stay short the IWM. There's, of course, risk of a rebound tomorrow, depending on the CPI. But boy, if it breaks the 100 tomorrow, that's going to be a confirmation for me that the 200 should be played if you're not already in it. And again, if you go with the XHB, excuse me, the IWM, you don't need the XHB. It's kind of a redundant play. Some of you asked about that, but pick your pick. XHB or the XRT or the XBI, IWM, all of them act the same way. So you just want to pick one of them. If you're playing the CPI via small caps and the yield-sensitive risk-off instruments like the XHB, ITB, XBI, KRE, which is not doing so hot so today. The KRE, let's see if we took the 50 or not. We didn't take the 50 yet, but the KRE got impacted with the banking news that we got. You look at JP Morgan here. JP Morgan below the 50, and it took the 100 too for a moment, now closing above. I think that what we're going to see here, big flush. The shorts covered a little bit, but you'll see more sellers showing up in the next few days. And I think that somebody mentioned the 200 days moving average, which a touch below 200 would be the point where we find some support. But right now, once we've seen JPM going down big like this, the trade for me was, if you're not already short, some of you were short, already booked profits, but the trade was buying the 205 September. Calls, September 20, that is. I think I'm done with this trade. I just closed it right now before the stream. And I'm actually looking for a short entry, not today, but later on in JPM, as we see more sellers showing up. XLF, you'll see damage here, another big whack, but some would call this as a bearish consolidation pattern when you have one bearish candle, bullish, and then sandwiched with another bearish. And you have, of course, the momentum indicators moving down. So financials not looking good. And even you look at Goldman Sachs, this one appears to be breaking down. We looked at Morgan Stanley. So a lot of them breaking down. You see Morgan Stanley here with topping in his shoulder. So it just doesn't look good for the financials. But let's go talk about the big caps quickly here. Apple, anything to change above the 20? No, just holding that support from the lower Bollinger Bands. That's about it. Let's look at the hourly chart here, see if we can find anything, nothing at all. We don't see anything that changes our perspective. You got the lower low, and we're looking for a lower high, and next thing you know, we have a lower low again. So nothing changes in Apple today, despite the fact that it is, I think, positive today. But yeah, just a touch negative. Okay. Microsoft moving higher because of Oracle. Still not a conclusive rebound here yet. It's a battlefield. You can see it here in the MACD indicator. It wants to head down, but then Oracle kept it higher here. We're waiting a resolution in Microsoft, so this one would avoid entering anything right now until we lose. I mean, it's below the 20 moving average, but you need to lose today's action to have a confirmation there was a one-day phenomenon. Now, if we look at Google, that's the week. It remains weak. I think we need to close the gap. So remove the Bollinger Bands. I think there's a gap here. And if there's a flush tomorrow in the Qs, I think Google finishes that gap. And at that point, we'll close any shorts we got in Google and switch to the calls because it's going to be really, really oversold if it gets to that point. Meta, interesting action today, but inconclusive really within the body of the bearish engulfing candle. So you got to assume that this is sort of a bearish pattern. It would break to the downside unless there's a rescue from the CPI tomorrow. But in the intraday here, there's nothing for me to do in Meta. We'll keep the bearish butterflies, by the way, if you got it, because, I mean, failure to move higher, failure to move higher, failure to move higher, and keep. So there is a seller that keeps showing up in Meta all the time here. And the only big cap that looks pretty good, I mean, not pretty good, but better than the rest, is Amazon, because this one is above the 20. And you can argue that maybe we have somewhat of an inverse in his shoulder here, and he goes higher. Amazon, of course, benefiting from the news from Oracle today. Again, whether that's going to last tomorrow's session or not remains to be seen. But Amazon's the only one that looks better than the rest of the big caps. Tesla, before we go, anything in Tesla here? Plug in your 50, still below, so I'm not a buyer, I'm not a seller. I'm just going to wait till I get my confirmations. I don't have any right now. We have this big bearish engulfing candle. We're trading within. We're going to see a resolution. It could be, of course, an inverse ABC, but you got to see a little more before you follow, because we're seeing some insane options activities in Tesla. Most of them in the calls, by the way. So I'm not sure what they're betting on, but we're seeing a lot of huge calls showing up. So that's Tesla for you. Oracle, anything to do here? I don't want you to short Oracle right now because it is a gamma phenomenon. You have short covering, you have gamma squeeze, so keep it as it is. If it goes softer in the pullback, say tomorrow, that'll be good news for the spread that we have, the calendar spread. Ideally, of course, we go down to 150, 149-ish, but I would not initiate a new short. Just keep the ones, the trades that you got. And the call options is, of course, the one that we're playing here in the calendar lotto play. I think we do a little bit of a pullback, and hopefully we do 150 before the end of the week. We go below that. Besides that, Bitcoin, last one I want to look at here before we take your questions. Bitcoin, let's do this here. Real quickly, Bitcoin. Anything that changes here, go to the weekly chart. That's my daily. The daily, I'm not really looking at it too much. I'm looking at the weekly, and for now, within the body, whoops, clean this up. Within the body of last week's candle, it didn't break the 50, so we'll hold our horses a little bit here until we get more clarity. I think the CPI will open a path for a lot of these trades as it settles where the dollar is going to go up or down. I guess the last thing in my notes here that I want to show you, with names like Ally Capital, like Capital One, I mean, look at this flush. Ally today's down about 17, 16%. That's a huge whack here. Of course, you don't want to buy the dip here. Okay, we might get a rebound, but this is breaking down. You look at the weekly chart and you see this is breaking down. This is a change in the narrative. And then you look at Capital One. Here you see a little bit of a recovery, doing a little better than Ally, but all of them are kind of getting hit. Even Discovery, if you look at Discovery Financials, also got hit. A little bit of a recovery today with JPM, but you look at the auto dealers, CarMax down big, let's see, about 5%, I think. About 5%, a little more than 4%. Carvana, same thing. So the dealers are getting hit. General Motors getting hit because the assumption is with the Basel requirements and the commentary by Ally Capital, it indicates that probably demand for used new cars will be way weaker as we see more delinquencies showing up. So again, with GM, if you want to take a short on it, I think you got the permission to do it right now. Below the 100, below the 50. You got a little bit of room here to the lower Bollinger Bands. That's sitting at about 43, so you can take a trade here against GM, and I would take it in the money. I would take the 45 puts. So if I'm going to initiate a trade right now in General Motors, I would do the 45 in the money. Sometimes you got to do in the money in names like this. I'll go with the 18 October 45 and just stick to that. Build on it. If we go down further, if we're below 43 by, let's say, end of the month of September, then I can open spreads and have other options to play. But GM, not looking so good here. A lot of, if you look at Ford, same thing. A little cheaper than GM, but you got to have a little more patience for this guy to go down. So pick your pick. Ford, GM, doesn't matter which one. All of them will get hurt by the news that we got today. Anyhow, let's do some of your questions here because the time is tight. Neil, good to hold the NDX 18,600 puts for October. 18,600. Let's look at this here. NDX. Mind you, I'm a little lagging here. 18,600. You're so close to the money. So, and you don't have a reversal yet. You're not trading above the top of the breakdown candle. So yeah, I'll keep it because for all you know, all what you're doing is sort of an ABC breakdown. Tomorrow, if we're closing above the top of the breakdown candle, sure, I would say yeah. Time to take it off and switch the bets. But right now, it's just too premature to do it. Stone, thank you so much for joining. VB Match, Tommy T, thank you everybody. Mav, how would you think the various CPI scenarios will impact the XLF? I have some Lotto XLF puts, 44.5, expiration date 9/13. Closed half today, so you made a nice profit here, 44.5. Look, today was an opportunity for you to close the whole trade, to be honest with you, since it is weekly and you have the explosion in implied volatility, but you might get a little more out of that tomorrow. Depending on the CPI scenarios, again, if we see lower rates showing up because CPI came out cooler, folks think that that's going to be good for the banks. But understand that JP Morgan has a huge weight here, and JP Morgan been riding high because of the net interest revenue that have been doing, and that's going to go down as yields go down. So if yields go higher because CPI is hotter than expectations, I think it'll be bad for everything. So I think that, yes, you could keep it for one more day here. You took half, so you've been disciplined. Keep the other half for tomorrow, and we'll see what happens. You're hoping that you'll score again tomorrow. But really hard, as we said with yesterday's video, really hard, especially in the bond market. I know how the dollar is going to react, but what I'm not sure about is how the bond market is going to react, because sometimes you get a hotter CPI reading and you think that the bond market bond yields should go higher, right? Because we're getting at 25, not 50. But then the bond market reads it as, oh, but this is going to exacerbate the recession, so it should go down in yields and rush to the safety of actual bonds. Hard to predict how the bond market is going to react. But I think we have a little more where that came from in today's session in the XLF. John, Ryan, thank you, everybody. Tyler, thank you. Leo, everybody, thank you. Let's do Oracle 155 puts for October. Neil, we don't want to do that right now. I'd rather that you pick on something else. So we have Adobe coming out. I think Adobe went higher today based on Oracle, but I think Adobe is a different animal than Oracle. It's more in the consumer side, and I think we'll have cuts as the consumer budget gets tighter. So I think if we want to buy puts, I'd rather go with Adobe than Oracle, because Oracle is going to stay hot at least all the way till the end of the week. It might pull back a little bit, but you got to understand that today all of the implied volatility for calls and puts are really high. So you're probably going to overpay, and even if you get a little bit of a pullback, it might not pay you. So I'd rather stick with doing a put trade for Adobe later on, not Oracle. Hey, man, is there a 50 basis points optimism due to the banking crisis? No. At the end of the day, it's the CPI that's going to dictate. And right now, it's not a banking crisis. It's a warning sign that the consumer is getting weaker, falling behind, not paying their debt, delinquency rates going higher. And Goldman Sachs warned today about the revenue. JP Morgan warned. So you have some warnings showing up, but it's not a crisis yet. That's going to morph if we don't see the 50 basis points. Palantir 34 puts for October. I wouldn't do it here. Palantir is still too strong, and you're going to see a lot of buying until the inclusion date is behind us. So you got to wait till the inclusion date, then short Palantir. That's the trend. Pretty much everything that gets announced that will be added to the S&P. Between now and the inclusion, we see buying. After the inclusion, we see it going down. So hold your horses a little more here, and then we'll hit Palantir after the inclusion. David the Trader, good day. For those of us learning how to use options, can you either show an example now or in separate video detail how to set up shorting and hedging with calls as you mentioned? Thanks. So just like we did today. So last week, of course, the Qs was going down, and some of us went with, let's say, the Qs 445, 440 for October, November. So we're looking more at the weekly chart, and we're anticipating something, let's say, like this. But we went down, caught a rebound, formed a lower high, and now we're waiting for formation of a lower low. And we think that's going to happen by October or November max. So that's the main bet. But again, you have risk in the intraday chart with the daily. Now that we got 2 days worth of a rebound, that we could do a reversal in the daily chart by trading above, above the top of the breakdown candle. So how do we hedge against that risk? Just like I showed you, you buy the SVIX, or you buy a contrarian trades, such as a put against the SQs, which is the inverse index for the Qs, or you buy Q calls. If you'd like, you just go for tomorrow. If that's where you're hedging against, you go for the 11th, and then go with the calls. You don't go way too far, because you're looking for a one-day expiration here. It's going to cost you a little bit, but some folks would rather do it this way, because this hedge has better opportunity and better profitability, probability in tomorrow's session than, let's say, the SQs puts for Friday. But it costs you more. That's the problem. But it is also a valid hedge. So this is how we hedge for an event like tomorrow. We're looking at the weekly. That's the main. But the daily has to be considered, since we've done a little bit of improvement. Okay, Stone. I'm holding the SMH November puts and SPY puts spread, also November. Hedged with 913 calls in SPY Qs. There we go. Did you suggest closing hedges prior to the CPI? No. I want you to keep the hedges for tomorrow. And you have it for Friday. That's good enough. All what you need to do from these hedges is, if we say in the SPY here, if by tomorrow's open, we're trading above the 50, and we close above the 50 and above the top of the breakdown candle, okay, the message is clear by the market. The market wants to go higher. Then at that point, we're going to book the profits from the hedges or leave them to ride all the way till Friday, if you're comfortable with that, but I would actually book them. and then close my puts because the timing would be wrong. We need to see a breakdown. We need to see a failure at some point, going below the 50 again before we initiate the bearish trades. So that's the management that I would recommend here. What do you think about TLT calls for January? TLT calls for January. You got to test tomorrow, of course, with 50 or 25 basis points. Look, I would say if you're going to buy January calls in the TLT, buy them with the intention that you're going to exercise and own the TLT at some point. So in that case, you probably want to buy either closer to the money at the 100. That way, if you're at 110, you can buy at 100. If that's too expensive for you, you need to see a little more, such as trading above this range before you're comfortable. And here you got support. So we know we have an important number here around 110. Maybe you buy 110 for January. If you close above 110 at that point, exercise and own the TLT. So if you're not interested in exercising, I think that trading the TLT is not the best thing to do here because it's going to be really volatile and rocky, and it's going to go contrary to a lot of expectations. The Fed is going to cut rates. That means TLT go higher, but then the bond market does a different reaction. So you have to be careful with that. Mav, okay, so you think the TLT will make it above 102 by the end of the week or by next week? Hard to say. I mean, I wish I'd know the answer to that. But right now, if I'm looking at the chart alone from a technical perspective, let's clean this up right here. There we go. And we're above all of the resistances. So we're above this resistance right here becomes support. We're above this prior high. Let's do a straight line here. There we go. So my 2 cents from a technical perspective alone, yes, it should go higher. On the other hand, it's overbought, and we have a catalyst tomorrow with the CPI. So technicals say higher we go. The event coming out tomorrow, who knows? So if you have 102 calls for next week, it's a good bet, but you're either going to have validation tomorrow or it's going to go kaput. So do you have a hedging mechanism against that? You can do the TLT puts for tomorrow. Let's see if that's available. TLT puts for the 11th. Yes, available. Let's do here. If we have a drop, 100 will be okay. Cost you about 20 cents, right? 19 cents. That's going to be your hedge against your TLT long calls. 102 for next week. Let's do here. Far out. Do you expect the CPI reading to be weak? Oil prices came down? Sure. Yeah, I mean, oil, that's already priced in. We already know that oil is going to be down. Energy will be down. I think the wild card would be used cars, transportation, and of course, shelter. Of course, you don't want to, if the CPI comes out way too weak, I think the Dixie is going to go down. And will it go down enough to trigger the Japanese yen? That's another risk that a lot of folks not talking about right now. So I think that the reading, really hard to say, but consensus would say it should be weaker. It should be, folks are saying it's going to be 0.1% up month on month. Expectations 0.2%. How the market is going to react to that is a tick down than expectations with a positive reading in inflation. Enough to do the 50? Because you got to remember, back in the example that we have in 07, they did 50 in September, the first rate cut, but the reading in CPI was negative by 0.4%. We don't have that right now. So I think we need to see a negative reading to have a solid conclusion that 50 is in the bag. And we'll see what happens. But right now, I would say that it comes either meeting expectations, 0.2 positive, or 0.1 just a tick below. Good afternoon, Maverick. Do you think is it time to cover ELF? What is your opinion on Palantir, ANF, and Della's shorts? Okay, so let's do them one by one. ELF, I'm going to stay short on this guy. I think I got a really good entry on it, and we'll talk about my short portfolio. Hopefully we'll do him before next week. But I'm going to stick with it. Lots of liquidations here. And with Buffett buying Alta, I think that's where the money is going to go to if you want to chase beauty, even though Alta is not doing pretty good today, I think. It kind of took a nice rebound here. But I think money will go from ELF to Alta. That's where the value, the opportunity is. ELF, Estée Lauder, all of them are suffering. I think they're going to find support right here. So we have in the lows 88.47, 88.5. I think we'll find support at that point. Then we can talk about covering the short. But right now I'm comfortable with this short. I'm going to keep it. And I think, honestly, if we're honest here, they're going to spend a lot of money to establish this brand. and we might go down, find the support here, 88.5, rebound, and then form a gigantic head and shoulder before we head down further. And I think the stacks should be trading at 50, 40. That's the fair range. So I'm going to hold on the short on the Elf Beauty. Now, ANF, same thing. I think we're on track for the inverse ABC. Confirmation, of course. Taking the lows, 121.41. So if you want to wait, that's your call. You want to take it right now, that's fair enough. Just make sure that you hedge before important earnings and that kind of events. We don't have any right now. So ANF is a short. Now, Dell and Palantir, you have to wait till the inclusion is out of the way. And I'm looking at Dell. I think Dell is looking pretty delicious here for a short head and shoulder. The cemetery, of course, is the S&P 500. So, yeah, I'm comfortably shorted, but after the inclusion is done. Right now, maybe you want to concentrate on stuff like Qualcomm. That's already kind of broken. Micron, we've seen some bearish activities on it with the head and shoulder. So these could be leading Dell. And Dell comes out later after the inclusion. Mav, you mentioned if the CPI is hot, the Fed will have to raise rates. No. There's no raising rates right now. I mean, look at what happened in the banking sector today. There's absolutely no raising rates right now. That would be a disaster. I believe the CPI will be vanilla. I agree with you. Either it's going to be 0.2 or a tick down, 0.1. I'll be surprised, to be honest with you. I'll say it right here. I'll be surprised if we get 0.3, for example, and that's going to be a disaster. Not in the point where the Fed is going to hike rates. The Fed will do a cut next week in the bag. The question now, is it 50, is it 25? And if the reading is as expected or a tick higher, I think we stick with 25. Not going to be a good outcome for the market. If we go down below 0.1 or better yet, a negative reading, I think that the 50 will be on track. I think the market will like it. That's my analysis right now. I think the market will like the 50. Did the CPI leak? No, I don't think the CPI leaked. Maybe it did, but if you look at the VIX here, nothing happened since we talked. What's going on with the indices? A little bit of a pullback. I don't think anything leaked here, Neil. Of course, some people know about it ahead of time, always. The banks, so you have to look at the options here and what they're buying and all of that. It gives you a little bit of an impression of what they're doing. Let's do here Amazon. I have the 70, 165 puts. Just sell or wait and see. That's a tough one, Eric, because we talked about this yesterday, and it looked pretty good yesterday that it has a chance today. With the Oracle news, it kind of got out of hand here. Is it enough to take the trade off the table, though? I would say if you have October, let's see, is it October? Is it 9/20? I mean, look, you already endured a little bit of pain today, so what's the harm of keeping it till tomorrow? And Amazon goes down again. And if it goes back below the 20 days moving average, you're back on track. I would say at this point, if it was my trade, I already endured the pain today. I'll keep it. The Bollinger Bands are up here, so that's going to keep a tight lid on it. Let's do, what is your expectations for the CPI? Like I said, either a tick down or meeting expectations. Surprise if it goes hotter. I think it'd be surprising even to me. If it comes in weak, dollar down, yen up, yes, that's the risk. So I think what a lot of people are not talking about is whether it's good or hot, I think it could be problematic. Good meaning cool, colder than expectations. I think the sweet spot will be plain vanilla, just as it is, not moving the dollar by a lot, not moving bond yields by a lot, and then we'll leave it to the market to decide whether that's going to merit the 50 or not. And of course, Fed speakers will follow. Not right off the gate, but we have the PPI after that, and then I think Friday we'll begin to get some Fed speakers and we'll have a better impression on what's going to happen. Zanskar, can you comment on USO, XOM, VLO? As to the rebound after tomorrow, what is your estimated target? Oxy is there at bottom. Oxy, look, I'm going to exercise some puts and sell it. Unfortunately, I love Buffett, but this is a pain that I'm not going to endure. 55 was my cut loss. I'm going to cut it right there. If it comes back later on after the cuts, sure, I will add it. But to be honest with you, it is oversold in the weekly. Got it. And they're going to rebound after the cuts. But after the rebound, after the cuts happen, I want to go with the highest quality, which is ExxonMobil. So that's what I'm going to do. I'm going to limit my oil exposure to Exxon and USO, but after the cuts. You got to wait for the cuts because right now it's just every piece of news that we get, especially today. When you look at the USO, with the banking news that we got today, it's just pricing in a nasty recession. because of the consumer weakness. You need to see the cuts before you go long oil, even VLO, by the way. David, I was referring to Bumble trade. You mentioned shorting the stock and then hedging. Yes. Would you buy the calls where my stop loss would be and how far out? No. If Bumble works out, so Bumble right now we got the six puts, I believe. If by next week we're below 6, then we're going to exercise the puts and short Bumble at $6 a share. Now, some folks do something called a merit call, where you buy the 6 calls all the way to December, November as a hedge. That would be one way to hedge it, but it's going to be expensive. It's going to cost you. Usually I wouldn't do it. I would actually only hedge before important catalysts like earnings. That's going to come out in November, not right now. So if we close below 6, I would consider that a failure to recover and close the gap. I'd be comfortable with just holding the short position and actually set a stop loss, a regular stop loss with my broker on it. And that would be probably in or around the 20 days moving average. At that time, it could be in or around 6.5, 6.45, depending on where the average is going to be. So right now, the first thing we can do is just wait and see what happens next week. If we're below 6, we exercise, short the stack, have a stop loss at the 20 days moving average. That's going to be the hedge that we need because it stops your loss if the stock goes above the stop loss order. Let's do SPX, DEX expiration 5400, 53 December expiration, I should say, 5400 and 5375 put spread, 800 the entry cost. How can I hedge? Okay, so you have December expiration, 5400. So let's see how far you are from the money here. Not much, I believe. Got about 100. And again, if you close above the top of the breakdown candle or the 50, I think that's the point where you have to close it, okay? Because the spread is not going to be merited. Maybe by December it works out, but between now and then, it's going to decay a lot. So we'll know that the entry was bad, and we can initiate it later on. So right now, if you want to hedge against tomorrow, if you think that tomorrow might give us a pop in the pre-market session and we open at the 20 days moving average, then okay, buy the SVIX calls, buy some of those for this week. That's going to be your hedge. It compensates you for some of the loss you're going to get in your spread for the SPX, the put spread. Now, if you close above the 50, I would tell you tomorrow, take it off. We'll bring it back in if we have a reversal confirmation. Because right now, if we close above the 50, it would be actually a bullish reversal confirmation. Mav, is it okay to share what strike price you got for October 445 puts? Which ticker are we talking about? I'm thinking you're talking about the Qs here. I think you're talking about the Qs. Yeah, well, look, the 445 for the Qs, it's really important here. It ain't the price that you paid for because the decay is not that big. Okay, the decay is within normal range. But you got to abide with the cut loss. And we have the 100. We have the top of the breakdown candle. Luckily for us, it's the same range. If we go above the 100, we got to cut it. Okay, we have to take the 445, 440, any puts you got. We got to take it out. If we're still below the 100 tomorrow and we're heading down, we want to double down on it because we're going to compensate for the... Apologies. You're going to hear it again, so we'll mute when it comes back again. But here we go. Anyways, I have a bit of decay here in my 45 put options. But if we go down tomorrow, I think that's going to be my confirmation that we have sort of an inverse ABC, and we'll be doubling down on the price tomorrow. So keep that in mind, that we have a lot to do in tomorrow's session. Please comment on Disney Holding. You got October 18, 90 calls, in the CCJ. 10, 18, 38 calls with a 10% loss. Okay, Cameco, we don't want to do that. That's a commodity. We don't want to do that until the cuts are out of the way. Because any energy commodity is going to suffer right now with the recession news. So we take CCJ out of the picture right now. As far as Disney, you got the 90 calls. Let's Let's clean up the chart here. You got the 90 calls. We didn't see any break from an inverse in his shoulder. We took the lows. Remember when we talked about the lows here? We took the lows, which was 88.76. You're threatening to switch back to bearish momentum. I would say my 2 cents with the recession news that we got today in consumer credit, I would take it off because the chances of it reversing and going back up above 90 again, really slim based on the indicators right now. If anything, I think it might frizzle back to the lows again. So I would take both trades. I would close them. They don't look good right now. Mav, already in Dell, 105.95 put spread for 1018. Stop at 108.68. Any reason to keep? Slightly up, so you have 105.95. Let's look at Dell here. 105.95. I mean, look, the momentum is negative. It's about to change to negative. The only problem is you have this news about the inclusion. Right now, since you have your cut loss established, and you have a pretty good one at it, 108, yep, that makes sense. Since you have the cut losses already in, keep it. I would keep it for now and then double down on it or expand it. If we get the inclusion and we see more selling in Dell. At that point, you probably want to go down below 100. So you probably want to go with the 100 and then 90 put spread at that point. But right now, you got a good trade. I'll keep it. Thank you, Erica Zanskar Pfizer. Would you write covered calls to exit shares, or is it a good hold right now? Pfizer, I think it's going to thrive under a recession because it is a dividend-paying stock with high cash position. No threat for the dividend right now. It's going to be frustrating, though, between now and then. I think you bought it a little earlier here, so you might be up. I don't want you to exit the position, though. Keep it as it is because those kind of healthcare names will be benefactors. I mean, already crashed, so what is the risk here of holding Pfizer? You might write some covered calls and then it rallies and you cut your gains too quickly. So keep it as it is right now. What you want to do is just establish a stop loss. So I don't know where you got in, but for example, let's say that you got in at 25, 26, then let's say 28 will be a good stop loss. If we go below 28, then we have something else going on here. So just establish a cut loss. You don't need to sell the covered calls at this point. Let's do here Maverick. Thoughts on gold? I think gold will be impacted tomorrow, but not as big as folks anticipate. So even if you get a pullback, that's going to be an opportunity to buy. I think SLV will be more sensitive. So you want to watch the SLV. That's going to be the one that's more sensitive. And if the dollar goes down, sure, we'll have a big pop in the SLV. But if the dollar goes up again, as it's already kind of readying to do that move, why is it up based on the news that we got so far? If the dollar is right and we get 25, not 50, then I think that the SLV will go down. And having SLV puts against your gold position will be a really good hedge. Now, if you have GDX, I think you got to wait, hold your horses here. If we have a drop in the dollar tomorrow, then we can buy the GDX as a trade because it's more lucrative. When you trade the GDX, you make more money than trading GLD calls or gold contracts. So we'll do that tomorrow. But right now, it's a little too early. Neil, would you recommend SQ puts as a hedge against NDX puts? Yes, for tomorrow, sure. That'll make sense. Or the SVIX calls. Just pick your pick, whatever one you like. Thoughts on the IYR puts? The IYR made a break today, so it's above the important number, 175. We're not going to fight it right now. If tomorrow, for whatever reason, we see bond yields higher, I'll be the first one to say, okay, I'm going to take a short against the IYR because it is overbought. Way overbloated in the weekly, which is more dangerous than the daily. And we've seen before when we got these kind of readings on the weekly. I mean, you see one right here, right? We went down, you see one right here. We went down and we've seen one right here. And that was kind of closer to the top in the IYR. So I would take the shot, but after a confirmation from bond yields tomorrow. So just hold on to it a little more because today it's a bullish break, if anything. Mav, if you were only going to trade one instrument for this stage in the cycle, which one would it be? I'm focused on the Qs only. I find it tough to manage multiple trades. Yes. You don't want to open because there's a lot of redundancies. And a lot of things are going to trade based on ETFs. For example, I've heard a conversation on TV about gold miners that, hey, you have the oil prices down, gold up. Why are the gold miners lagging? Well, it's because it's traded in metals ETFs. So if the other metals and chemicals go down, they're going to sell the gold miners too, whether that's justified or not. So for now, I think you're right. If there's any downside risk right now in the market, it is concentrated in the Qs, because that's where we have the over concentration. That's the ATM in the market right now, the big caps and the chips specifically. And then you have the other category at risk is the IWM. But the IWM could also be a category for opportunity. If we have the rate cuts and we have a period of the light at the end of the tunnel with the 50 basis points, going to fix everything, you might see the IWM going higher. Even if that's the case, where do you think the money will come from to chase the rotation to the IWM? It's going to come from the ATM of the market. So right now, I think that the big caps and the chips are the ones that are most threat. And if I'm going to short anything right now, it's going to be concentrated in the Qs. If I'm going to go long anything, I got to wait to see how the market is going to react based on the cuts. It could be the IWM. It could be the dividend-paying stocks, which were already kind of long, but we'll add more to them. It could be some of the cyclicals that catch some of a rebound as all the economy might improve with the Fed rate cuts. All assumptions that will not come to life between us, but you can trade on it because the market will have phases of hopes and optimism. Let's do Lululemon. My biggest loser, still holding 100 shares. How best to exit this thing? Same applies to AMD. Okay, Lulu, heartbreaker. Just ugly. That's all I'm going to say about it. Every time you think it's done, I mean, right now your only hope that you got here, that this will form somewhat of a higher low, and we see a rebound. And maybe the rate cuts will kind of give that hope. So right now, I will set the stop loss. You've already endured a lot of pain here. I would set a stop loss at the lows here, and the lows would be 226. A little too far, but if we cut the lows, then you know that we're going to go down further. But right now, there's still hope that the momentum in the weekly is improving. You might see some activist investor hopping in. You might see the rate cuts giving us some optimism. So I want to hold it a little more. You might get improvement and exit at a better point, or it might even keep it if it improves by much and takes all of these resistance lines. You might want to keep it. So for now, I would say keep it, just establish that stop loss. As far as AMD, that's more at risk because the chips, like we said, the ATM of the market and really nasty formations that we see in the weekly charts and the SMH, or even if you look at the SOXX. So I would say the AMD, you got to be careful with that. And I would say to exit, you probably want to sell some calls. If you're comfortable with exiting right now, take the high of this candle right here, 146, let's call it 145. Sell the 145 calls. If you trade above and we close not comfortably above, let's say 150, 155, then there's a chance of failure again, and you sell at 145. But right now, to be honest with you, I would just establish these stop losses. And the low of this candle is good enough, 132. Establish that cut loss. I mean, you can sell calls, you can sell puts and try to be cute to exit with some few bucks. But think about it this way. If it continues to go down, what is the point of selling puts or calls to raise some capital? Meanwhile, you're going to be locked because you can't really exit the trade until these expirations are already in. So think about it as stop loss for now rather than using options to exit. Mav, do you think the cyclical basis, the market will sell off into the elections because of uncertainty? Investors will jump back in after the elections? Well, we've seen that, but the debate is happening today, and it will give us some kind of certainty of who's going to win. And I think if the market likes Kamala, for example, if she does okay today and it comes with the impression that she won the debate, that she's going to solidify her win in the polls, then the market will love it and continue to rally from that point on. If it doesn't, and it sees Trump as a threat, for example, because of tariffs or whatever, or even Kamala, whatever it sees. So tomorrow's impression will be important. Not just the CPI, but what is the impression based on the debate? That's also important. But I would caution that the elections is not the most important issue. The most important issue is what the Fed is going to do and what's happening with the economy right now. All of the warnings that we got today, can we remedy some of those by the 50 basis points cuts, which, by the way, takes about a year to kick in? So that's another thing that we're going to talk about, and I think that's more important than the elections. And if we have, let's say, Ally Capital or Capital One or Discover Financials, any of these lenders, if they blow up or they show signs of blowing up, the fears of systemic risk will kick in the market. That's going to be way more important than the elections. Anyhow, folks, we have about 5 minutes here. Let's see how the VIX is reacting. Holding at 19. I'm not going to take any comfort here to say that we're out of the woods. If it was 17, I would have said that. But right now, for all you know, tomorrow morning will be above 20 again. So all we need to do here, please, if you have some puts, October, November, just hedge them for tomorrow. SQs puts, SVX calls, do something here to hedge. Just in case if you have upside to come, don't spend too much. You don't have to hedge the entirety of the position that you have, the main position. Your goal is just to reduce the loss a little bit so you can manage the trade better, exit if you need to, switch to calls, exercise, that kind of stuff. But right now, let's keep it at the 1 minute. We have about 4 minutes left here. Not seeing any significant move one way or the other. Hey, Mav, I've been building a position in General Dynamics, GD. Do you think it is still a good investment with the Israel possible ceasefire? Not saying there will be one, but that's the headline. We heard that headline multiple times before. I don't think it's going to happen. I think you're happy today with General Dynamics. Keep it. It's a good investment, long term, really good. You have the war in Ukraine. You have more orders coming from the U.S. military. So, and General Dynamics, by the way, doing more than just tanks, and that's good news for the company. So keep it. Keep it. It's about to reverse from bearish to bullish here and move higher. I think it's even a better opportunity, to be honest with you, than LMT, which already rallied. So I think LMT might go down. Raytheon might pull back a little bit. We see money going to GD because that's the laggard. So keep it. I like it. September puts for GLW. Yes, we're holding that one here. GLW, Cornings. Let's look at the daily chart. We're still within the body of the bearish engulfing candle. Not quite above the 20 days moving average. We have bearish confirmation here in the MACD. I think tomorrow's session we could be playing somewhat as bear flag. We drop down lower Bollinger Bands, then we close. But we got to give it the chance because, a lot of folks were skeptical about the Uber trade, right? That it might go higher. Today it played out pretty good. We captured some profits on it. And the same thing with Dash. One more drop. We need one more flush here, and the trade will be pretty good. So got to give it a little bit of a chance here to work out. Of course, tomorrow's session will be pretty much the time cut loss for a lot of these trades with September 20th expiration. So we're going to have to do a lot tomorrow. We're going to be really active tomorrow. In any case, let's look at the Qs or the SPY here really quickly. 3 minutes. Closing at the highs of the day, above the highs in the morning. So closing pretty good in the SPY. The Qs, same thing. Closing like this, give us a bullish impression. So again, the hedging is a wise decision, but you never know what's going to happen with the CPI. Pinduoduo, in case I missed your comments. Any case for the upside for Pinduoduo? If you look at the daily chart, I'm still going to be more favorable to Bob over Pinduoduo, but if you're stuck in it, think about it this way. The buyers didn't show up. We gave them enough time, and I was given the benefit of the doubt of Pinduoduo. But we failed at 98. Buyers not showing up. I think in time you see more sellers showing up, so you got to be careful with this guy. On the other hand, you look at Baba, looking a lot better. And today I think it's up about 2-3%. Yep, 3%. So maybe you want to switch from Pinduoduo to Baba because that's the one that's working out right now. I'd rather be in this guy, to be honest with you. Okay, 30 seconds, folks. 30 seconds, last impression. They're buying the market here. Then I think the shorts are covering, to be honest with you. I think the shorts from last week are kind of covering. They're getting a little bit nervous about the CPI. That's merited, but if the CPI comes out ugly tomorrow, hot or too cold, I think we'll go back to the same record from last week. Last bit of trades here. NVIDIA 117 calls, that's for 25. Let's see what they're buying for tomorrow. With the expiration date of tomorrow. There we go. 2 days. Sell. What are they buying? Qs 44, 447 calls, 549. So they're buying some calls here. Then that's moving the tape higher. And I think the bears are kind of selling here. Some of their puts too. That's contributing to the move higher. And bear in mind that a lot of these trades that you see right now, a lot of them are also hedging against a short position that expires in October or November. So a lot of shorts here are also pushing the tape higher by doing these kind of hedging activities, which we're doing right now. So we're all contributing to this. But again, folks, tape closing right now, 548.78. And the Q's closing at 458.76. Let's look at the daily charts above any of the averages, not in the Q's. Above the 50 here, the 50, 549.13. We closed at 548.78, so no close above the 50. We're going to have to wait till tomorrow. Anyhow, folks, let's see if we have any questions here on Discord. Then we're going to wrap it up, and we'll talk again in the show. You created that video in the portfolio playlist. It's named Hedging Ideas Prior to the CPI. Yep. Okay, so let's look at Gator here. Mentioned the hourly MACD settings in the 1 hour chart. This is the day trading settings, I guess. So if you want to do the day trading settings, let's go here to the SPY. I'm going to look at the hourly chart. And again, different traders. And I have, by the way, I write down my settings for Apple, for NVIDIA. Each one has a different setting in the MACD indicator, not just for the hourly, but for the daily, for the weekly. But it's frowned upon by technical traders that you change the settings. So we all trained our eyes to play with the daily settings. But if you're going to change them, you probably want to do something like this. You got to look at the hourly chart and you change this closer to the 60, not above 60 though. So 55, some folks do 52. And you do that at 24 here, increase the period to 14 a little bit, and you see a little bit of a better, smoother MACD that gives you a better signal, at least in this chart of the SPY. So it gave you a signal to buy here, gave you a signal to buy here, gave you a signal to sell right here. All were accurate. Gave you a signal to buy here, signal to sell right here. So all of them were accurate. And you got to play with these settings for each chart because each one has an individual setting. Again, the purest technical traders, they don't like this. They frown upon it. But hey, if it works, that's all we care about. Anyhow, folks, not seeing any more questions here. So we're just going to wrap it up right here. But we have a conversation. We have a good conversation coming out this evening. Because we're going to talk about the banks and what happened today. CPI a little bit more based on the data that we have. So stay tuned here, folks. Take a break. We'll be back again this evening. Thank you so much for joining. Appreciate all of you. Love all of you. Good luck. And if you didn't have good luck today, better luck tomorrow. Take care.